Okay, so our mini cases in this class, if you look, um, they're worth 18% of your grade. You can see that we have a mini case in each module. Okay, so I'm going to show you how to go about solving a mini case on Excel and what the expectations are for what you should be turning in. So let's go to our book or go to our Blackboard. In the mini cases, if you scroll down, they're going to be down here on the bottom. And if you go in here, it shows, let me go ahead and just go start attempt. And so it basically tells you you're going to solve it basically the way you solve the quiz. You remember showing you work on the quizzes, you're going to solve it basically the same way. I want you, if you can, put it into given, find, and solution sections. I use formulas, don't pick up a calculator. And there's a rubric here that shows the expectations, okay? So let's just go ahead. I'm not going to work on many quizzes we've been assigned, but I'll just go ahead and just give you what it kind of looks like. So this is what a mini quiz would look like, or a mini case would look like. And so what I'm going to do is I'm just going to go ahead and start putting this information in here. And to save time, to save time, I'm just going to, I'm going to go ahead and just, I'm going to just show you how I would put it in. And so I put it, so I took you remember you want to have these numbers separate because you're going to reference them later. In my given section, I want to pick all these numbers if they're not separate. Like I can't click on this, right? Because it's not a number. So you want to type it in here again. So we have the system cost, $2,700,000. You're going to renovate the building in order to install it, and then it says the life is 8 years. So you can see I'm not even really thinking about the problem yet. I'm just taking all this information and put it in here into the given, and just making sure I have all these numbers separate where I can click on them later if I need them. The salvage value is 100,000. I'm just putting this in here. 5-year class. I might not need the number 5, but just in case I separate it out. It says it use a straight line method to calculate the depreciation. And I'm saying why. When I did it, I just kind of thought to myself, why? Because this would probably be better. So sometimes cases can be confusing, but in real life, things can be confusing too, right? Like sometimes you have too much information, not enough information. You got to go get it. So this is something here that might be a little bit confusing. I was going to remove it, but I said, you know what? Let's just leave it in here. And it says the tax rate is 30%. And then they say, okay, well now this is how it was set up. Well, suppose we're going to sell the equipment after 4 years. And this is the salvage value is the same as market value. This is how much. Whenever you're doing depreciation, you're going to have a book value. You're going to have a market value, right? So the book value is what the IRS thinks it's worth. The market value is what it's worth actually if you actually sell it. You want to try to keep that as close as possible, but sometimes it gets off a little bit from. So anyway, so they say, well, if we sell it after 4 years instead of after 8 years, then it's worth $500,000 because you haven't worn the equipment out as much. We want to know the tax impact. What's the tax impact on this? Is what it was before, and this is what it was after. So what's the tax impact? Okay, so there's a lot to think about here, but so typically what I would do, I would say, okay, this is what's before, so let me do what's before. And also we have 2 different ways of depreciating, so maybe we should depreciate both ways. So since it says that the company uses SSL, straight line, we'll do it that way first, and we'll do like a before. So let's say, first before we do anything, we have to calculate with something called a depreciable basis. And the depreciable basis is, what am I depreciating? Well, it's going to be equal to what the system costs, and then what it costs to renovate. So this is what you're going to be able to depreciate, right? I'm going to put the formula in here so you can see it. I'll try to put that in as we go. Okay, so we could go. So I'm going to do it a little different in the book. I'm going to go. I'm going to do this, and this will make sense in a second. And also, I'm going to assume a cost of capital. I'm gonna, for borrowing the money for it, we'll put that in here too. You can assume any number you want, but this will make sense why I did this. And then, so we can go year 1 and then year 2. Now, remember, I make this look easy because I know what I'm doing. Like you're learning, so don't feel bad if I'm doing it real fast and it takes you a while to figure this out, right? So life is 8 years. So I'm going to highlight these first 2 and drag it out all the way out to 8, right? And the beginning book value, well, that's equal to what my depreciable basis is, right? So I'm doing a little different in the book. You can look at the book how it does it, but I'm just doing it sideways instead of up and down, and I'm adding a couple of things just so we can understand what's going on. So this is what it started at the beginning of year 1. This is how much I spent, right? So that's how much it's worth. And since I'm depreciating straight line basically says what you're going to do. Well, you're going to sell it for $100,000, so I can put that over here. The salvage value is equal to $100,000. See, I'm not getting into the fight area. I'm just going to use this information. This is how it started out, and then this happened second, right? So we're going to do it the initial way here first. So after 8 years, you're selling it for that. So now depreciation each year, since it's a straight line, you're gonna depreciate the equal amount each year, right? So it's going to be equal to this. And I'm going to F4 it because I'm going to copy it across and I don't want to move off of that. Minus what I sell it for. I'm going to F4 that. F4 is like an absolute reference. So it's not going to move when I copy it around. Now you can type those dollar signs in, but F4 is just a shortcut way to do it. And then the life is 8 years. I'm going to go ahead and F4 that too. Okay. And then I'm going to hit enter. So each year I'm going to depreciate it that much. Straight line means you're going to depreciate it the same amount each year. Okay. And so I'm going to put the formula in here just for you to see it. But like, you don't have to do this. I'm just doing this for you. You don't have to do it when you turn it in. I can look at the formulas. If I hit Control, and then that key right above the Tab key, I can look at every formula you guys have put in when you submit it, right? So I know right away whether you typed it in or put formulas in. So don't worry about doing this, because when you turn it in, I can see what you've done. But if you want to do it just for your own purposes, I use something called formula text, and you can show the formula that's in there. All right. So my ending book value is going to be equal to this minus this, right? Because I depreciated it that much, right? And see how this is 13 cents. So what we could do, we could format these all. That way they all are out. You can take it. I mean, with Excel, there's no reason we can't take it out to the penny, right? That's not too hard to do. And then the book value at the next year, at the beginning, the ending book value is the same as the beginning book value of that year. So I can just put like that, right? And then I can copy this across. And right now it's not right because I got to copy this across too. And you can see now I'm making this look real easy. You might have to pause the video and look and see. But you can see now that the ending book value is exactly what the beginning book value is, because I use this formula here. Now this formula is in the book how to do this too. Also, you could go like, if we go back out to here, I just want to remind you guys that up here under course materials, I have a lot of information here, right? So you could maybe go and look and see, is there some hints on how to solve this? So maybe I can go to chapter models in Excel. I'm pretty sure this mini case came from this chapter. And so it talks about depreciation and all that stuff. So I may want to use this. I may want to use this information. So I'm going to go ahead and download it. And then we open it up. I'm going to enable editing. And so maybe I like this. This actually just shows you what I did, where I took this plus this minus this divided by 10 to get the monthly. This is what I just did. Now see how they're doing up and down. I'm doing things sideways. But this has MACRS. So this has some stuff in it I might like. So I'm going to go here. I'm going to right click on this. Before I do that, I'm going to go Control Tab to go back to my other Excel spreadsheet. Let me save this. I'm going to go File, Save As. We'll say mini case solved. You save it in whatever folder you want. Okay, so now I can go over here. So this is the model I just downloaded from, remember I downloaded it, I went here into, I went in models in Excel. There's also in-class problem solved. There's a lot of good information here. You don't want to forget that that's there, right, when you're working with some of these problems, in-class problems. So it shows a lot of information. So I got that from here and I downloaded it. So, so let's say I want to move, I'm going to just take this whole sheet and put it into my model. So I'm going to go down here, I'm going to right click. I'm going to go move or copy. And I want to move it to this one I just solved. I move it to the end, I'm going to create a copy. I go OK. And then I can go ahead and close this other one, right? I can close this because I don't need it anymore. And now I have, this is what I was working on. Now I have this here. You can see this, what they did right here is what I did right here to get this monthly depreciation or yearly depreciation. Okay, so now the tax benefit. Well, the tax benefit is pretty easy to calculate. It's equal to your it's equal to your tax rate. And it's going to be times. Now I want to, again, I'm going to copy this across, and I always want to use this tax rate, so I want to F4 it. And it's going to be times my depreciation. Okay. And you can see the tax benefit's the same because the depreciation is the same. But it's not the same, since this tax benefit is 8 years out in the future, this one's 7 years. So if we really wanted to compare different depreciation methods, we probably want to find the net present value of these, because this is $106,000 now is different than $106,000 in 8 years, right? So that's called the time value of money. So I'm going to use something. This is not in this chapter, but I'm just going to show it to you. So I'm going to go equals net present value. So I'm going to discount each one of those cash flows. And I'm going to assume, remember I assumed 10%. So I'm going to assume 10%. And I'm going to discount those back and see what is that worth right now. It's worth $568,000, right? So if I'd use straight line depreciation and have a 10% cost of capital, though, you know, it's not worth 106 times 8 would be over 800,000. But no, this is not the same because it's out here. Right now it's worth that, right? So be careful with net present value. It's a very powerful function, but you got to know what you're doing, right? Net present value always assumes that your first cash flow is in year one, when that's the case in period one, and that's the case here, right? So that works fine there. All right, so that was before. So now they say they use MACR as 5-year class. So now we can, this is the beauty of Excel. I can take a lot of this stuff and I can just copy it down and just modify it. So I'll put it down here. And so the beginning book value is actually, I just got to move this, right? It's actually equal to that, right? And then the depreciation, well, the depreciation, now we're using a different thing to depreciate. We're not doing a straight line. We're using this depreciation right here, right? We're using 5-year class. See how it says 5-year class, MACRS? So what I could do, I could take this. Let me just take this. And I'm going to copy it. And let me put it over here. No, I'm gonna make it sideways instead of up and down, since I'm going sideways here. So I'm going to right click. I'm going to go say paste transpose. Right. Now look here how I got some. I'm going to go Control Z because I don't like that, because it's going to get into my. Let me go back here. I only need like 5 years, so I'm just going to highlight this much. Copy. And then go back here to where I'm working. And I'm going to paste that transpose. All right, so now I got those numbers. I didn't have to type them, right? I could have typed them, but it's kind of nice. I'm going to show you why I did this sideways instead of up and down, because now we're going to do is calculate the depreciation. It's going to be equal to my beginning book value times whatever my depreciation, what I'm allowed to depreciate in year one. And then I can copy this across. And you know, these are 0, right? because we didn't have anything out here in year 7 and 8. And so this is how much I'm able to depreciate with MACRS. And then it calculates the ending book value the same way, right? And I see why, no, since I have the sidewise, see how I went to that one. And then I went to that one. That's why I wanted to move it sideways, because it's much easier. All right, and then the salvage value. Well, the salvage value is $100,000 again. And the tax benefit, well, the tax benefit here, now you can see, okay, hold on. I want to make sure this is all correct. Okay, something's wrong here. Let me just double check. Yeah, this is correct. It's depreciated down to 0 by the end of year 7, right? And so since the government thinks you have 0, and you're actually going to sell it for $100,000, this is a negative benefit. So it's going to negative 30% times 100,000, right? Because your book value is different. Your book value is different than something's wrong with this book value. You see. Let me double check it. Okay. Ending book value is that. Beginning book value is that. Okay. So this I'm not gonna edit this video because I just want to show you that even a finance professor can make mistakes. This depreciation, when I did, I forgot to F4 on this, right? Because it's always depreciating based off the depreciable basis. So now if I copy this across, now we can see that the book value, now it makes more sense here, right? Now, so the book value is 0 after we do that last depreciation. But you can see at year 8, when I sell it, I have the salvage value was 100, and then the government thinks it's worth 0, so I have to pay back that $30,000 that I took as a tax benefit. So what I did is I took 30% times this $100,000 of income I get. Even the government thinks it's 0, but I'm getting $100,000 income. So I have to pay 30% on that. So that's going to be a negative tax benefit there. But you can see that this is why I said Y up here. You can give this pretty much any cost of capital, and the tax benefit using MACRS is much better. You know, when you find the present value of each one of these cash flows is going to be better. That's why I said, why would you use straight line? Okay, so now, I know I'm going kind of fast, but I'm trying to make this video short for you, right? So you can see I'm doing a lot of modeling, and all these, I'm not picking up a calculator, I'm using formulas. I'm trying to be smart at how I do this. All right, so now we're going to do the suppose part of it. So now let's just go ahead and, this is the beauty of Excel. I can take all this and copy it down and work with this. Oop. So now it's only to 4 years, right? So I'm going to get rid of all this stuff. I'm just going to copy blank cells over. And so now we're going to say, all right, so we know we're going to sell it after 4. So now my depreciation is going to be equal to, oh, by the way, the beginning balance, we got to make sure this is right. It's equal to my depreciable basis, right? And my depreciation now we know the salvage value is going to be $500,000. So I'm going to go equals this. Remember, I'm not typing 500,000. And now I can do my annual depreciation is going to be equal to this. I'm going to go ahead and F4 it because I want to copy it across. Minus this. I'm going to F4 it. Now I'm going to put parentheses around it. If I don't put parentheses around it, it's not going to divide this whole amount. I'm going to divide it by this, and I want to F4 that. And then if I copy this across, again, I'm making this look easy because I know what I'm doing, right? So you can see that my book value is equal to my salvage value. And And it definitely is going to make a little bit difference. Like, I mean, it's not going to make any difference as far as uh, as what's that asking? Remember, so well, what's the tax impact? Well, the tax impact here is compared to up here. Well, you're going to make, we could say, well, this is actually a little bit better than this as far as the net present value of your cash flows, right? Your tax benefit is going to be, it's going to actually be a little bit higher, right? Let me double check this. I got to make sure this is up here on 10%. Okay. So this is worth $580,000, right? But there's not going to be any problem, right? So now let's do it with the MACRS. Let me copy this down. And again, I'm gonna copy blanks over this. We're only going out to 4 years now. So again, the beginning is going to be equal to my depreciable basis. And this depreciation is going to be equal to my depreciable basis. Now I'm going to remember to F4 it, right? And it's going to be times that. We're going to still use this 5-year classification. And so, and my salvage value is going to be equal to this. So again, it's not going to make any difference, right? This is some rounding error. So these are the same. And then remember, we're on this NPV, we're going to make sure we point that to our cost of capital. So again, MACRS is better, but it's not going to make any difference because you can see here that the ending book value on here, first of all, I would use MACRS because that'd be better, right? So tax implications, why are you using SSL? Because so that's something like if you worked at the company, you might question like, hey, why are we using it falls into MACRS 5-year? Why don't we use MACRS? Because we have we can get a higher tax benefit using MACRS. Why is it better? Because we're getting those cash flows earlier on, right? Like for example, you're getting 106 here, you're getting 282 here. So when you discount it back, it's a higher amount, right? So it's better to use MACRS because you're getting. So if it lets you do it, why is the company using SSL? So that's one good question. Another thing you can see that this, if you use MACRS, it's not going to have any difference because you have the same ending book value. So and you actually have the same amounts here, right? And since you're selling it and you're using, and you're going to think you're going to get $500,000, they don't change, so you could say no difference. Okay, and I would highlight that in yellow. These are my answers, right? So highlight in yellow. So I know I went kind of fast here. I'm just trying to keep this video short. So this is what you turn into me. You save it, and you can leave this work that you have. It's okay to have another page with something you got out of the book. But I want to see this. I want to see your calculations and then your answer. And it'll make sense to me. You can describe whatever you want. Like remember, you don't have to do these formula texts here if you don't want, because I can just go here. I can see all the formulas you used. And what I'm not going to like, if you typed $500,000 here, I'm going to say, well, why didn't you use what you're given up here, right? This isn't type 500,000. It's pointing to the 500,000. And the reason you do that is because if you make changes in your assumptions, well, it's going to automatically change down here, right? So that's how you want to model things when you're using. Remember, Excel is a language of finance, so you got to learn how to model things. All right. So now, if you're an Excel wizard, this is probably pretty easy for you. If you've never done Excel, you're going to probably say, "Oh man, that's a lot of work." But it's really not that much work. The more you use Excel, the easier it gets. So anyway. Hopefully that makes sense. Now, another thing you can do, I wanted to point out. Let me minimize this. You'll see that if you go back to course, I'm going to close course materials. You go into module 1, it has general questions form. if you have a question, you can ask a question in here, right? So you could say, hey, I'm having trouble, whatever. And if you ask questions in here and you answer questions here, make observations in here, if you remember, if you go look here, let me open it again. Your grade calculator. I'll give you extra credit here. 20 points extra credit if you're participating in there. So if you're asking questions or you're answering questions or making observations, if you do it at least 5 times during the semester, so that's a good place to ask questions too. In many cases and quizzes, you can actually ask questions about them here too. Now, so don't forget that that's a good resource, right? You can also email me and say I'm having problems with the mini case after you've done that, right? Not until you've exhausted all your resources. I want you to be looking under course materials and looking for hints here. You should have read the chapter before you start this, right? You should have done your quiz before you start this. All those are going to make this mini case a lot easier, right? If you try to do it right at the beginning, after you've asked some general questions and everything, then you can email me and say, hey, can you make a YouTube video on that? I'm not understanding it. I've tried everything. Now you got to make sure you do that. If it's due tomorrow, you ask me for a video in the evening and the day before it's due, that video is probably not get done. But I can make a YouTube video too. So anyway, hopefully that makes sense. So after you've completed it, then of course you're going to go in here, continue attempt, and you're going to attach it here, right? So you can go in here, attach that file and put it in here. And remember, there's a rubric that shows how to do it. Okay? So hopefully that makes sense. Now, I kept that kind of long. A lot of it was just actually how to solve that problem. But I think you kind of get the idea what I expect. And that's it for today. Thanks for watching. Bye.